Supply chains around the world are struggling to keep pace with demand. Ports are handling unprecedented volumes due to the uptick in e-commerce and rebound in manufacturing after coronavirus-related closures. The Port of New York and New Jersey, the third busiest in the US, recently welcomed a gargantuan container ship. Fred Katayama takes a closer look at how the harbour is managing this rising tide of imports and the implications on the shipping industry.
This is the Marco Polo, the largest ship ever to visit the U.S. East Coast and Canada. Containers stacked 9 tiers high are packed full of goods from China and Southeast Asia.
You'll probably see a lot of furniture on this, apparel, footwear. A lot of the stuff people are ordering through e-commerce and on Amazon.
From bottlenecks at the ports of Los Angeles to a grounding in the Suez Canal, container ships are making headlines as more and more goods are transported around the world by sea.
With people stuck at home under a lockdown last year, spending shifted from travel and recreation to tangible goods like home appliances, furniture, fitness equipment, and electronics. That surge in consumer demand has caused container cargo volumes to surge.
Since July last year, U.S. seaborne imports have risen above 2019 levels, and they've stayed significantly higher ever since. Imports in March of this year grew 51% compared to 2020, the highest year-on-year increase since the beginning of the pandemic, according to S&P Global Market Intelligence's supply chain unit, Panjiva.
From July, August of 2020, it's been guns a-blazing in terms of volume through the port. Continued very strong volumes, double-digit growth.
But while volumes are up, vessels and containers are in short supply. Marco Polo operator CMA CGM is the largest carrier servicing the U.S. East Coast.
Demand is just unprecedented. It is exceeding the supply. That will continue. Because if we could find ships to implement, to once again help our clients, would deploy them right now and put them in service. They're just not available.
The capacity limits are leading to huge rate hikes, which are being passed on to the consumer and causing rising inflation.
If you're an importer, what you are paying to the ocean carrier to ship goods is 3, 4, 5 times what it was. The rates have gone through the roof.
With the U.S. slowly emerging from COVID-19 lockdowns, spending may shift back to the disposable economy as people begin forking out on entertainment and travel again. But analysts, shippers, and ports agree that the rising tide of imports is not likely to ebb anytime soon.
I do think that COVID has accelerated what was already taking place in e-commerce. So I do think that there's been a structural demand shift higher.
At the Port of New York and New Jersey, Christmas starts in July as importers stock up on consumer goods for the holidays. And it'll be all hands on deck as a pandemic-driven surge merges with the peak shopping season. Fred Katayama, TRT World, New York.
For more on this, Chief Shipping Analyst at BIMCO, Peter Sand, joins us now from Copenhagen in Denmark. Welcome to the show. Now, when at the height of the pandemic, economies were shut down, logistics were a nightmare, so freight rates were rising. But now all of those restrictions are being removed, and yet rates are still rising. Why is that?
It's because demand is extremely strong. What we have seen in terms of demand for containerized goods on a global scale is up by 11% in the first quarter. And if we go on the Trans-Pacific trade lane in itself, what is transported from the Far East into the US West Coast, that's up by 40% from last year in the first 4 months of the year. Obviously, 2020 was somewhat of a strange year, but still, it is a result of a lot of money spent on containerized goods and very little on services.
Now, Peter, I've tried to do some research of my own, speaking to freight forwarders in other countries like Bangladesh or Pakistan, some of these smaller regional ports, and they seem to be having a really hard time finding a container. Are shippers prioritizing the Chinese shipments over other countries?
I think everyone is trying to get everything everywhere ASAP. So everyone across the board are struggling to find empties to fill them up and satisfy their customers' needs overseas. So it's not only your friends in the local region around in the Indian subcontinent and locally around Turkey. It is more so also if you ask perhaps the grains exporters out of the US, they have been short on boxes for many months now, and it all of a sudden arises as an issue because of the massively high freight rates on the what we call the front haul, so where most boxes are moved. So obviously carriers are doing whatever they can to bring back the empties as soon as possible to the main exporting regions, and sometimes the losers in that schedule are the exporters in those regions lacking a box.
Okay, now looking at industry reports, we don't expect a slowdown anytime soon. We're seeing projections of a normalization by 2022. What does that then mean for shipbuilding or for the production of new containers? Should we be expecting a spike in those industries also?
In terms of shipping capacity, 2023 seems to be the next, say, big delivery year for new built container ships. At least if we go by some of the most recent numbers also published by the research department in BIMCO, where we see a surge in total new build orders of 120% in the first 5 months of the year. And if we go specifically into that of container shipping, we see a preference for, you can call the larger mid-sized ships, those that can carry 15 to 16,000 TEUs. They are preferred over the very large, say, motherships, the ultra-large container ships that can carry 24,000. One of those that got stuck in the Suez Canal only 2 months ago. It will take a few years for more capacity to be built, and in between now and then, a lot of manufacturers, especially also in the Far East, are busy building the metal boxes, the containers themselves, in order to ease that shortage in the meantime.
Well, in the meantime, full speed ahead for the shipping industry. Thank you so much, Peter Sand, for your input on the show.